Ladies and gentlemen, welcome back to Data Dispatch. Hope everybody has had a nice, long, extended holiday weekend and had some time to basically just mentally distress and reset the brain, especially with trading and stock market. And you're seeing numbers that are jumping up and down, up and up and up and down. You know, it's good to take that mental break, take a little bit of a breather. And that's exactly what these long, extended weekends are for. But hey, we're going to be kicking off September here. We've made it to September. It's crazy how fast time is going. So we'll be talking about the stocks that we've been keeping on the watch list. What I'm personally going to be doing to be preparing for this month, we have a shortened trading week from the holiday, which typically comes with lower trading volume levels. And in terms of historical and seasonality, what September really means for the market. We also have some macroeconomic pieces of the data that we'll be covering. So that will be coming out this week. Hit that like button, subscribe for daily videos. Hope you guys are all having a good day. Pop it up on the screen here. You see Palantir currently trading, not currently, but closed at 156 on the last trading session. And in the overnight hours right now on Robinhood, opening up here, down about $1 a little bit here at 155.70. So basically just kind of holding steady, not a ton of volatility coming in right off the bat. And we're seeing that same thing with futures across the board. Amit, a big content creator, had posted this year, giving credit on X, talking about futures here being relatively flat. So where we look at Palantir, in terms of seasonality, we'll be talking about this in a few short moments, and basically kind of what we had with August. We're going to be expecting, and personally, I'll be expecting Palantir to kind of consolidate and hold this level in the mid 150s. One cool thing that Palantir has been able to do in terms of some trading patterns here is after, Palantir gapped up after its earnings, hit these all-time highs here about like that 189. After that big sell-off that we saw from the whole Citron short report and blah, 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 we saw Palantir come down about 20%. And you see Palantir that's holding these mid 150s pretty well here and had a good bounce off in terms of triggering a reversal right at that 142 area. So in the 140s and the 150s, Palantir is relatively strong looking at just these previous few months. So I do like seeing that in terms of the volatility and the downward pressure that we could have in September. The reason why I say that is because historically what we've seen is September and August has been a red month. However, August did actually close in the green. We'll be talking about that right here as stock futures are a little changed. So really, what does that mean for September here? Talking about this new uncertainty. And of course, we're also seeing some political, I would say, tensions that are starting to arise regarding the whole tariffs and the court decisions, blah, blah, blah. Talking about that here in terms of the developments on the trade front, kicking off seasonality, poor month for equities. In terms of what we've seen historically, I think they had right here, over the last 5 years, we've actually seen the S&P 500 average down about 4.2% in September alone. And it is the worst month for equities. Amit here had talked about how over the last 15 years, historically on average, it's been down 1.2%. We've been kind of preparing for this, when are we going to get this small correction in the S&P 500? And a lot of people were expecting that in August, and the bulls were actually able to maintain that. The bears were not able to take a hold of that, as August actually closed in the green about 2%. So considering the S&P 500 rose nearly 2%, when is this time due? Does that increase the probability for September? And I think that is a decent, does have a decent amount of chance behind it. Personally, I'm going to be kind of sitting on the sidelines, accumulating my cash or maybe saving more cash, basically waiting, still dollar cost averaging in a long-term portfolio. But as soon as we see a little bit of a drop here, I'm talking 3 to 5%, that's where it could possibly be. I'll be adding more heavy weight in terms of cash positions moving over into equities. In terms of the whole, federal appeals court here on Friday, they ruled that most of President Donald Trump's global tariffs were illegal. Now, the U.S. Court of Appeals here for the federal, they determined a 7-4 ruling that these only Congress has the authority to apply these, these sweeping levies. Trump, he called this decision highly partisan and said that he will appeal the ruling to the U.S. Supreme Court. So we're going to see some tensions here in terms of how this is going to play out regarding the actual moves from the tariffs. Is that illegal for Trump to impose all those? Is it not? I don't get too involved into the politics, more just looking at how are the politics possibly going to bring volatility into the market. That is more, my priority, not at the actual legalities behind these tariffs. But once this kind of all gets settled, that's where we're going to possibly see the reaction to the market. In terms of that, you also have the Federal Reserve and talking about uncertainties here, raising questions about their independence, more looking at, still the probabilities high for that rate cut come September. That's coming this month, hopefully. If the Fed, there's like an 84% chance, that's currently being priced into the market. If for some reason that does not happen, that's where you could see more volatility that would be coming. One of the big things that we're keeping on our radar, I think, to help reassure that hopefully a rate cut is in the near future, is looking at the jobs report. Now, unfortunately, in terms of a shortened trading week right here, the actual jobs data right here is not going to be released until Friday. So we got to wait till the end of the trading week. Friday's release of the August employment report is basically just going to be coming after the prior month's data reveal that the labor market has continuing or maybe weakening, which would help improve our confidence that, a rate cut should be coming. Employers here, they added jobs in July, but however, revisions to the results from earlier months show that jobs creation was weaker than previously reported. So in terms of Jerome Powell here cited weakness in the labor market, that's where it's going to be opening the door for interest rate cuts. So on top of that, like I said, with September's seasonality, I'll kind of be sitting on the sidelines here, waiting to see what happens. Currently, the SPY's down about $1. Not going to take that with too much of a weight in terms of how I'm going to be personally reacting. But some of the stocks that I'll be keeping a close eye on are stocks that could be potentially entering into a dip, in stocks that I am very bullish on looking into the long run. And of course, it's going to be depending what the market gives us. We could see a lot of bullishness coming out of the gate, but right now, just going to be preparing for the current trend that we've seen historically with September. Stocks keeping on that I'll be keeping on the radar. ASTS been really hanging out around this $50 zone. If this pulls back, this is something that I'm bullish in. It'll be interesting to see. It could be testing the 42 here at support. Nebius right here. Nebius has done well, gapped up after their earnings. Now, if we see a gap back down into the 50s, Nebius does have a lot of support here. You can see a lot of trading history, consolidation in the 50s. That's where I could be looking to possibly see Nebius in terms of entry positions. Oklo, very interesting right here. I'm being kind of cautious with Oklo. Very bullish on nuclear, but just kind of letting to see where does Oklo go here in the near future. CoreWeave right at a very interesting spot at this $100 zone. There's kind of the psychological support. We'll see if it holds. If it doesn't, it could be coming back down here to the 85s. And Hood has a lot of support at the 100. So Hood, typically below 100, does not hold there for a long time. If it does close, below 100, or if you see it more of a further drop, those could be, obviously potential opportunities. We'll see if the market does give that to us, or if, hey, possibly being too greedy. But right now, I'm not going to be entering any calls personally. I just don't want to be too leveraged on a, one of the weakest months, and especially this week, just because of the shortened holiday week. Let me know, what do you guys think about all that? Peace out, take care, and I'll catch you guys later.